Hi, it's Jeff Wade at stockideas.org, and I just want to do a quick video because people keep asking me, should I buy Apple stock? Definitely an interesting point in the Apple saga, and just want to do some quick back of the envelope analysis to give you an idea. So you can see here an Apple chart, and it's been consolidating up base on base. If you're familiar with Bollinger Bands, you can see that they're tightening, which might indicate an upcoming move. So, people, of course, are right to ask, should I buy Apple stock? Now, one thing to keep in mind whenever you're talking about any stock is what's your time frame? What's your goal with the investment? What are you really hoping to accomplish? Are you in it for a quick trade or for the long term? Now, over here, I've just pulled up some stats on Apple, and we're going to use these to just do a quick back year chart here of Apple, but I want you to pay attention to book value per share, which is 137.4, and 12-month trailing EPS, which is 39.75. And we're going to use these numbers in the Graham number calculation. And this is a formula that Ben Graham came up with, a value investor. And it's kind of just a quick and dirty way to figure fair value for a defensive investor is. So what we're going to do is take 22.5, which is the sort of Graham coefficient, and then multiply that by the book value, which was 137.4, and then multiply that by the EPS, which was 39.75. And we're going to take that, and we're going to take the square root of the answer. Oops, I apparently made a mistake here. Let's try that again. Sorry. 22.5 times 39.75 times 137.4. So this is the Graham number for Apple, which is based on the earnings and the value of the assets. That's kind of fair value for Apple stock before any intangibles, goodwill, brand leader in consumer electronics. So some premium over that base number is probably warranted. Additionally, you can see that Apple's trading at a PE of about 13, which is pretty conservative, and the PEG ratio is only 0.92, which is pretty reasonable as well. If we go back to this chart, you can again kind of see that in the short term, Apple has crossed through its 20-day moving average and is moving to its lower Bollinger Bands. And these Bollinger Bands are pinching, and that can indicate that a big move, either up or down, is coming. Additionally, you can see that the relative strength index here is sort of declining. It's still above 50, which is bullish, but it is declining. So we would want to see this start to turn up pretty soon in the next move. Now, the corollary here is that if Apple reverses higher, this has some room to run and could run up to 70 or above before starting to pull back. Now, so that kind of hopefully gives you an idea. We think a move is coming in Apple. For me, I've been owning the stock kind of down here. I was picking these bottoms, which was a trying experience, but has worked out well, despite being a little unsettling at first. So, should you buy Apple? I don't know. I think, you should be aware that you're paying more than, what the company's worth up here. But, it might be an easy to manage trade if you went ahead and I'll just draw a quick line here. 1 second, sorry about this, as it loads up. So yeah, I would maybe just draw a line here and use this kind of as my stop. So you might want to add a position here, and then if the stock kind of reverses against you, you have an easy to manage exit. That said, I think with Carl Icahn, with David Einhorn, and with some of the big hedge funds kind of lobbying API to be more shareholder friendly, there maybe are more, there is maybe a case for a floor in the stock because the company could buy back stocks, or these activist investors will keep buying stocks. So, you may want to put on a small position here. It's easy to manage as a trade. If it goes through the 20 day moving average, you can cut it. And if the Bollinger Bands explode higher, you'll be in the money very quickly. So whether you buy Apple or not is really up to you and up to what type of investor you are. Hopefully this has given you an idea into what the company's, a really quick idea. Let's not be cute here. This is some really quick back of the envelope analysis, but when you start to consider the fundamental valuation as well as the technicals and then some of the other catalysts, such as activist investors, you can get a little bit of an idea into how this stock might act, and you can kind of develop an if-then scenario. If the stock breaks this, you might want to wait until 450, down here before adding again. You've seen these drops. It's definitely possible. On the other hand, this could explode higher if the market continues, or if Apple, releases a 60-inch TV or, some really new product that people aren't expecting. I think the forward PE and the PEG ratio kind of indicate that, earnings expectations aren't huge, growth expectations aren't huge. It's maybe turning into a value stock, but that the jury is still out on that. So hopefully this has given you some idea into if you should buy Apple stock or not. Again, it's obviously not a perfect analysis, but you always want to be taking into consideration the technical picture on the short term and the long term, as well as some of the fundamentals, so you really understand what you're paying for. Again, I can't emphasize enough, this is just a really rough look, a really quick and dirty analysis, so please do your own research in much more detail. But hopefully this gives you an idea of some of the factors you can look at in determining if you should buy Apple right now. Thanks a lot for watching.